Good morning, everyone. Welcome to the Stock Market Morning Prep video for Wednesday, January 14th. Well, aside from a pre-market strength in the futures, the market's gapped up early on, first thing in the morning, rallied for about a half hour or so, and then went sideways and just literally collapsed. Price literally just fell out of bed. You could see this in a 5-minute chart, and today I'm just going to concentrate on the indexes. Yesterday we mentioned about how the indices are really in a conflection point right now, and showed you some of the indicators, and the indicators look like they had plenty of room to run to the downside before we really get to these washout levels. So there's plenty of room to go to the downside here before we even start looking at any type of bounce. And that the strength in the morning failed, and we closed with an outside day. That's not really good for the markets. Not good at all. We were up a little bit in the pre-market session, and now we're down in the ES about 9.25 handles. So things don't look too good so far, but we'll see. We'll take it one step at a time here. Markets are at a critical juncture right now, so we don't see some buying coming in next couple of days. We could be running into a full-fledged correction here. Too early to tell, but to see this come up and fail and literally just wash out pretty much most of the day, and then of course we had some short covering into the end of the day, which is normal, it's typical. I would use a lot of caution here, okay? If you are looking to add to your orders or to your positions, if you're longer term, I would wait a little bit. I think we could pick them up a little cheaper here, okay? Let's go right into the indexes. You can see here we had these bear flags that I pointed out yesterday, which actually triggered. It looked like it was going to fail and start to head back up again, which is fine. And if that did happen, we may be able to challenge these highs, but it failed miserably. We closed outside, so we had a big engulfing red candle, outside day reversal, closed below the 50, and our next target is going to be this little gap area of support, which is going to come right in this area here. And let me just put that, mark that right here. That's going to be that area. If we lose this little area, we're going to look at that 200, and then we would even need to reevaluate, okay? So that's not looking too good. 200, let's call it around lot 200, really needs to hold here. On the bigger picture, the weekly charts, which we don't have enough time to go over right now, but the weekly charts do look fine. We're continually making higher highs and higher lows. So at the moment, the longer term picture is still well intact, okay? Let's just take it one step at a time going into the daily charts. So you can see here that 200 area is going to need to hold. If not, look for the 197.24, which is that 200-day moving average, okay? Let's take a look at the IWM. Now, the IWM has been the problem child pretty much most of 2014. And as you can see here, we had literally a sideways consolidation for November, December. We broke up to new highs going into the end of the year, and then we failed again. So really whippy price action. But again, you can't deny, you need to kind of watch what's going to happen here in the IWM. If the IWM, which is the Russell 2000 ETF, starts to really break down, guys, watch it. It is one of the key leaders of the 5 indices that we follow. And if we take out that 200, then I would start looking for some downside targets, which I will prepare for you. At the moment, we're just kind of stagnant, running up and down. I want to keep the charts as clear as possible without having Fibonacci retracements coming back and forth here. So let's watch it. But it does look like that we're coming into some weakness here. Okay. Take a look at the diamond. Same thing. Really bunch of chop here. A lot of mess the last couple of months, and now we're still above the 50, which is a positive. But let's watch this. Make sure that we can easily break this 50, and then we would be right back down to this 172 area, and then of course the 200. So let's keep an eye on that. And these are the targets that I'm watching for some further weakness in the markets, okay? And then lastly is the Qs. Now the Qs, Apple did really well the last few weeks, and now coming into a little bit of pressure. Again, the lower highs, the lower lows and lower highs here is not a good sign. So the next target would be, of course, this little consolidation here. Just call it 100. Let's round that off to 100, and then let's see and let's reevaluate it, okay? So be on target here. Keep an eye, keep a heads up on the transports. Let's watch what the Russell's doing. Remember, gold's starting to catch a bid. That's not good as well, because maybe that fear factor trade might be coming into play here with gold. So let's keep an eye on gold. Let's see what gold does. And as well as these key indicators, I'm going to be looking for some washout levels to see if we do get some sort of a bounce. Remember, we got plenty of room to run to the downside before these indicators become way oversold. Okay, so right now we have plenty of room to run to the downside in these indexes. So let's see if we start to pick up steam to the downside. Maybe we might be in this correction. Again, too early to tell, but let's just take it one step at a time, okay? Take care, everybody. We'll speak to you tomorrow.